Some very interesting dynamics are happening right now to our US housing market. So, for example, the amount of houses for sale just hit the highest January levels since January of 2020. In fact, housing inventory increased in every single one of the 50 biggest cities, with Denver at the top of the list with a gain of 55%. With the increase of inventory levels, we're also seeing more price drops as well. This January saw the highest share of price drops for the month since 2017, with the exception of 2023 and 2019. So in today's video, I'm going to share exactly what's happening right now based on the US housing market for the month of January. And by the way, this is the first report I've seen which covers the entire month. Other resources such as the National Association of Realtors will not post their numbers for about 3 weeks from now. Also, the stats I'm sharing in today's video vary quite a bit by the area. So I'll also share how the 50 biggest cities fares because, of course, there's some very big differences. Okay, I have a lot to share in today's video. Let's go ahead and dive right in. It says sellers are inching back into the market this January. There were 24.6% more existing houses for sale this January compared to January of 2024. That marks the 15th consecutive month of annual inventory growth. However, this is an increase from December, which was up by 22% year over year. So in December, we're up by 22%. This January, we're up by 24.6%. So the growth rate is slightly accelerating. Having said that, while inventory has been accelerating as of late, we're still down compared to typical pre-COVID levels. In fact, we're down by 24.8% compared to the average January in 2017, 18, and 2019. So if you guys follow the channel, you guys all know I love Realtor.com's data. They shared the entire month and they posted it about 1 day after month end. I love the timeliness of that, but also how they share pre-COVID levels. Redfin only goes back to a few years on their weekly updates. So in any case, this is a little bit messy. So I kind of want to break this down here for you guys. So January is right here. This dot, January 05, around 830,000 houses for sale. That's up by 24.6%. So therefore, we're at basically a 4-year high right now for the month of January. So here is a 24, which is kind of like, it started kind of similar to what other year starts, fairly flat. But then starting in March, a slow increase. And we basically had a slow increase every single month until we hit November. We had a late peak of inventory that year. Now looking at 23 is right here. Inventory was decreasing, then it started increasing in May, small increase until we hit, again, November, a unseasonal late peak of inventory. And of course, 22, inventory was at all-time record lows, around 350,000 houses for sale back in March of 2022. Then it skyrocketed, it doubled from March through July that year. So by the time we hit July, we're at 700,000, and then it peaked again in late November. Of course, this is one of the main reasons why we saw home prices decrease in early 2023 compared to the previous year, because of this sharp run up in inventory. Whereas this year, inventory was increasing, but increasing at a slow pace. And of course, it did not double any time during last year. So in any case, looking at inventory right now, 830,000. This is way higher compared to around 375,000 in January of 2022. But the average pre-COVID levels is around 1.1 million. So big picture, it's great if you're a home buyer, if you want to see more houses for sale. It's up by about 25%, but we're still way lagging behind looking at pre-pandemic levels. Every market's different. I'll share how the 50 biggest cities fare regarding inventory levels here in a little bit. All right, so that was the supply side of the equation. Let's talk about the demand side, which is pending home sales. Buyers getting their offers accepted, right? The number of houses under contract, pending listings, continued to rebound in January, increasing by 1.8% compared to last year. But it is less than December's 7.4% gain. So in December compared to December of 2023, we're up by 7.4%. Now it's only up by 1.8%, which means that it's still increasing, but increasing at a lower pace right? This deceleration regarding demand. They go on to say here this slowdown was partly due to the fact that mortgage rates were increasing, which caused pending listings to not increase as much this January compared to December. They go on to say the following: though mortgage rates are significantly higher today than they were just a few months ago. A few months ago, we were in the low sixes or mid sixes. Now we're at around 7%. So their forecast shows that as both lower rates and time chisel away this lock-in effect that has held back sales for quite some time. They say the past year, but it's been about 2 years now. We should expect to see home sales rise modestly by 1.5% in 2025. I also expect this as well. This is just, we're in January, a lot could change, but based on the data we have today, I think we're gonna have around a 2 to 5% increase in home sales this year as mortgage rates decrease a little bit, but also due to the fact we have a lot more inventory, a lot more options for home buyers to choose from. And of course, that's generally speaking on a national level, more inventory. And in fact, out of the 50 biggest cities, every single one of them has more houses for sale. Some up a lot more than others though. Let's also discuss new listings. It says sellers increased their activity this January as newly listed houses were 10.8% above last year's levels, an increase from December's small rise of 0.9%. So this acceleration of new listings hitting the market. This puts new listing activity at its highest January level since 2021. Let's have a look at a chart going back to 2017 though. So even though we're up the highest level since 2021, it's not very high though. I mean, we're basically in line with January of 2022. But having said that, we are significantly higher compared to January of 24 as well as 2023. Of course, we're still lagging behind pre-COVID though. During that time frame, we should have around 400,000 that should have been listed for sale. But this January, we're only at 327,000. I'll say this again, if we had a sharp increase, let's just say that new listings were way up here, 500,000, way higher compared to previous years, inventory levels will absolutely skyrocket. But the reason why we're not seeing inventory absolutely skyrocket is because we're not seeing enough new supply in the market, a small increase up by 10.8% year over year. Now, the inventory of houses for sale, of course, varies quite a bit on the area. So the biggest increase nationwide, is actually in Denver, up by 54.8%. Then we have Las Vegas up by 49%, and Tucson, Arizona saw a gain of 45%. Despite higher inventory growth compared to last year, though, most metros had fewer inventory compared to pre-pandemic levels. Among the 50 biggest metro areas, 14 metros, though, saw higher inventory compared to the typical January of 2017 through 2019. The top metros that saw inventory surpass pre-pandemic levels were predominantly in the South and the West. Those included Denver up by 45.8%, San Antonio up by 44%, and Dallas up by 38.8%. This is obviously way higher compared to the national average. Again, the national average is actually down by 25%, whereas these other metros are posting big gains compared to what's normal looking at pre-pandemic levels. What's also putting upward pressure on inventory levels is houses are taking overall longer to sell on average. It says homes are spending more time in the market compared to last year, but less than pre-COVID. So it's taken about 5 days longer to sell a house compared to January of 2024. However, compared to the average January from 2017 through 19, houses are selling 11 days faster though. Let's have a look at days in the market going back to 2017. And this is good news if you're looking to buy a house, maybe not so good news if you're looking to sell a house. Every market's different, right? But in January, it took around 73 days on average to sell a house. Look at January of 2022. It was less than 60. And then once we got into the spring home buying season, it dropped to 30. Now it's at 73 days. Therefore, it's more than twice as long compared to the craziness of April and May of 2022. Also, it's higher compared to 23, 24, 2021, of course, 2022. However, houses are still selling faster though compared to 17 through 2019. All right, let's change gears slightly here and talk about the share of reduced price listings. This is when you have your house for sale and you reduce your price because you asked too much for your house, right? So you have to reduce your price in order to get a buyer. So this January, that ratio was at 15.6%, which means more or less that 2 of every 10 houses for sale have reduced their asking prices nationwide. This is only slightly less than January of 2023, as well as January of 2019. Real estate is local though, right? It says 41 of the 50 largest metros saw the share of price reductions increase compared to 1 year ago. And that in fact has been accelerating because it was only 26 in December. So Portland, Oregon saw the biggest increase, a gain of 10.5 percentage points, followed by Providence, Rhode Island up by 5.4 percentage points, and then Grand Rapids, Michigan up by 4.8 percentage points. All right, let's change gears again and talk about how each of the 50 biggest metros fared regarding asking prices. So the biggest decrease is actually in the Austin or the greater Austin area of Texas, down 9.2% year over year. Definitely a buyer's market in Austin, Texas, to say the least. In contrast, one of the biggest increases nationwide regarding asking prices is actually in the Baltimore, Maryland metro area, up by 6.8%. We're also seeing big gains in Cleveland, Ohio, up by 11.3%. And also big decreases, though, in Kansas City, Missouri, down by 10.3%. Big decreases in Miami, down by 7.9%, whereas Milwaukee, Wisconsin is up by 6%. In addition, the San Francisco Bay Area is down by 6.6% year over year as well. Okay, let's also look at inventory levels and the share of price drops as well. So this is something that really caught my attention. The greater Austin area, inventory is only up by 16.4%, whereas the national average, again, is up by 25%. So looking at the year-over-year changes, Austin, Texas up by 16%, quite a bit lower than national average. However, going over the past 3, 4, and 5 years, it's off the charts. They have a lot more inventory compared to the past several years, despite the small increase year over year. And their higher share of price drops kind of coincides with that. Nearly 20% right now. Again, the national average is at 16%, so higher compared to the national average. Also, big increases of inventory we're seeing in Charlotte, North Carolina, up by 38%, a gain of 31% in Columbus, Ohio. Dallas is up by 36%. Again, Denver up by 55%, whereas Detroit, Michigan, small gain up by 10.9%. We're seeing big increases in Grand Rapids, whereas in contrast, really Hartford, Connecticut is only up by 1.8%, and the share price drops only 7.3%. Houston's up by 26%, in line with the national average regarding the share price drops. Jacksonville, Florida up by 40%. Las Vegas up by 49%. Los Angeles up by 33%. And we're seeing big gains in Miami up by 41%, whereas Milwaukee, small gain up by 5%. Going down this list, let's look at Sacramento, where of course I'm here as an agent. We have an increase of inventory up by 34%. And one of the reasons for that is a giant increase of new listings up by 31.7%. But despite this big increase of inventory and new listings, the share price drops is actually less than the national average. It's at 13.5 compared to the national average at 16.5. Going down this list, San Diego saw a gain of 44.5% of more houses for sale. San Francisco is up by 24%. And also big gains in Tucson up by 45%. With that said, if you guys want a real estate agent referral, then please email me at jason@meetjasonwalter.com or check out my website, which of course is realestateteamfinder.com. And of course, if you're looking to buy or sell a house in the greater Sacramento area, of course, my team and I would love to help. We also cover the San Francisco Bay Area as well. With that said, thank you everyone for watching today's video. We appreciate you. I should say I appreciate you. Have an amazing day, and we'll see you in the next video.